Lot for that. Well, let's get to some stock-specific fundamental analysis. Going with Dipan Mehta, Director, Elixir Equities, who joins us on the show. Hi, Dipan. Good morning and good to see you. Well, Bajaj Auto's numbers actually were a little bit subdued on the margins on the commentary front as well for the festive season. And the stock trades at more than 30 times its forward earnings. But I was reading a Jefferies note and they believe that these premium valuations are justifiable. What's your take on the stock? It's been a big outperformer in the last 12 months.
Nigel, good morning and thank you for having me on your show. I agree with Jefferies. I think that the premium valuations are justified purely because it's of its diversified revenue streams. And there were times when Bajaj Auto's market share suffered and it underperformed its peer group because it was focusing on very difficult export markets. But now those exports have turned out to be a growth engine at a time when we are seeing a slowdown in the domestic market. And margins are also industry leading, I would say. So I'm pretty satisfied with the numbers of Bajaj Auto. And in light of the kind of stress which is there, or building up of stress in the auto sector, these are good numbers. And look, in this market, everything is trading at a premium. So why not a blue chip company like Bajaj Auto?
So you're saying that the uptrend could continue, no reason to look at the issues on margin, gross margin or festive sales. Basically, you're still positive, right, Dipan?
Yeah, see, I mean, I wouldn't want to go out and buy any auto share, including Bajaj Auto at these valuations. But if an existing shareholder is there, he can remain invested and only buy perhaps at correction. So I think it's a steady state company, reasonable valuations in the context of what multiples the market is trading at. And the numbers are pretty decent. And I would say that they will be much better than what the other peer group companies may report.
Well, we remember, I think, Mr. Bajaj saying, right, 12,000, that he sees value in the stock going to 12,000. He made that statement.
Didn't he up it to 14?
Okay, I might have missed that, but the last I know that he said that he sees good value in the business.
Absolutely. Yeah. I remember that. Deepan, another space which did very well yesterday was asset managers, right? HDFC AMC was up sharply. UTI AMC rallied 7-8%. Aditya Birla AMC was up some 11-12%. Just your thoughts here.
Yeah, good morning, Prashant. I think these are beyond blue sky scenario for asset management companies. Not only are they getting fresh inflows through SIPs and NFOs, but the existing portfolios of their funds also have gone up significantly, and their revenue model is based on the total AUM. So it's just that fresh AUM has come and the valuations have gone up. So, and these companies have very high operating leverage. So a lot of the revenues tend to flow to the bottom line. So these are great times for asset management companies. But one should keep in mind that there's a cyclicality. We haven't seen a down cycle in the market for many quarters. So all these numbers look extremely rosy. But who knows, 2-3 quarters, a year of a bearish market, and you may see a correction in these stocks as well. But for the time being, I think kudos to the entire industry. They've done a fabulous job in mobilizing savings into the equity market. And at these levels, I would remain invested. Though from a fresh investment perspective, I would put it on hold.
Got that. By the way, UTI, Vamangshi was telling us that in terms of valuations, UTI AMC is the cheapest. And then, of course, Aditya Birla. And on the other end of the spectrum, of course, is HDFC AMC. But, I mean, growth in both UTI and Aditya Birla has also been sluggish. Equity flows have been sluggish as opposed to Nippon or HDFC AMC. Two other areas. One is consumer durables, Deepan. IFB was up 15% yesterday. Voltas was up some 3-4%. And a bunch of other names as well. That is one. And the other is BSE, which you know intimately. Market cap rose to almost 70,000 crores. And by the way, we had the BSE CEO with us on the channel, and we pressed but got no numbers in terms of what they think could be the market share shift from NSE to BSE. Stock has doubled from 2,500 to 5,000 from the 30th of July when SEBI came out with those discussion papers for the first time. So just your thoughts on BSE as well. So consumer durables and BSE, go on.
So I think consumer durables, you have to factor in that the air conditioner sales are expected to be very robust in this summer season as well. And there were shortages the last time around, and all these companies reported exceptionally good earnings, but this time around could be even better. So we are seeing that trading positions being taken ahead of the summer season, which will start. I mean, the sales should start much earlier than that. So we are seeing some amount of buying taking place over there. It's one of the few segments within the consumer-oriented investment theme which is doing exceptionally well with high growth in terms of volume and value. So I would remain invested over there.
Okay, all right. Dipan, I know you're not very fond of the metals as well as the cement stocks, so we'll keep that aside for now. But we want to ask you about more stocks. For the time being, just stay with us. You know, China.
All right, we just have about 12 minutes to go before trade starts in. The pre-open rates have been coming through, and as of now, the indication is we could be starting on a bit of a soft side. I mean, for measure, I'm just checking what Bajaj Auto is doing, down 1% right now in the pre-open session. Let's see how this eventually plays out. That's the Nifty looking at a slight dip, 60 to 70 point dip. Okay, we have with us, I think, our fundamental guest, Dipan, who's still there. Dipan, a whole range of IT companies are going to be reporting today. So we've heard from TCS, we've heard from HCL Tech, which was actually really, really strong. Not sure why the stock didn't rally enough. Now, Infy is going into the event with great expectations. We've seen the build-up in the stock. What would you do with IT, both frontline as well as mid-cap? Because it's very, very company-specific. I mean, L&T Tech has been a disappointment today, for instance. So what are you liking? If you would buy anything fresh, what stock would it be?
Yeah, so you're right that one has to be extremely selective when it comes to software companies, and there could be a few outliers, but by and large, I'm not yet satisfied with the numbers which have come through, be it TCS, HCL Tech, and I'm sure Infy also will have that kind of a 1-2% type of growth rates, and those don't really appeal to us. You know, end of the day, as investors, you want to buy businesses which can grow minimum 15%. And I was just checking that for last 10 years, Infy's net profit growth has been 10%. Same is the case with TCS. So these are mature companies. And, if you want higher returns, you want alpha in the portfolio, and look for smaller companies within the software space. I mean, look at a company like Newgen Technologies, came with numbers, exceptionally good numbers, trading at premium valuations. But these are the kind of businesses that one needs to focus on and find them at reasonable valuations. By and large, a whole host of software companies, large and mid-cap, are pretty much fairly valued. And I would say that the returns prospects are not that great, and maybe they won't even beat the indices.
All right, Dipan, final question before we let you go. Then the big boy in the house, that's Reliance Industries, has underperformed. Now you've got the technical trigger that will come out for it with regard to the bonus record date. Your view on the stock, yesterday it showed signs of at least trying to form some sort of a bottom at around 2650.
Yeah, Nigel, I think great company, but what are the triggers to buy this stock? Considering that we're not getting any strategy from the management as to how they're going to unlock the businesses. Right now, it's got 3 businesses under one roof, and not all investors want to buy all the 3 businesses. So eventual listing of Jio and retail is the key factor here. Whether it's going to be a pure IPO where Reliance becomes a holding company, or it's a split, will determine a 10-15% type of a move in the stock price. So till that particular event doesn't take place, I think it's best to kind of remain underweight Reliance at this point of time, because this earnings volatility will impact sentiment in the stock. And I thought even Reliance retail numbers were a bit subdued.
Okay, well, yeah, that's true. I mean, the results were a mixed bag, but let's see what this bonus announcement does. Now that the record date is official, let's see if that gets investors and traders excited today. Dipan, stay on. We'll have more questions in just a bit.